Good afternoon, everyone. Thank you for joining us this afternoon. This is the third instalment, I think, of our Coffee with an Accountant. So I hope you have your tea or coffee at hand. And this week we're going to be talking about financial forecasting. And obviously, as an accountant, I'm a little bit passionate about financial forecasting. So I will apologise in advance if this goes on a little bit. We do have some kind of time for questions at the end, and the questions that you guys have kindly submitted before the presentation, I've tried to answer a couple of those within the presentation as well. So hopefully this is a useful afternoon, or 20 minutes of your afternoon at least. So as with all of our presentations, we've got the usual disclaimer, which effectively says this is not advice or guidance, and you can't hold me responsible for anything that's in it. Obviously, if you choose to pay me, it's the best advice in the world. So a little bit about ourselves. We're a firm of chartered accountants. We're based up in County Durham. We've been around since 1973, and we consider ourselves to be a general practice, which means we do a bit of everything, a bit like a GP practice for your patients. But we do have a specialism, and have had for a long time, specialised in the healthcare sector. We look after a number of doctors and dentists and care homes and children's nurseries, and I personally have looked after now doctors for well over 10 years, or from when I had hair. But I think it's important to start with, well, why is it important to look at forecasting, to look at budgeting, to look at the future? And what we've got to kind of remember is that there's a lot going on at the moment in the outside world, as well as within GP practices. We've got a global sum that's increasing by 3%. So that increased at the beginning of this month, and it's now at £99.70 per patient. Within that 3% includes 2.1%, or the assumption of a 2.1% pay rise for staff. But in March, so last month, we haven't got this month's figures yet, but in March, inflation was at 7%. So, if you personally, and I know I'm now on the energy price cap at home, we've seen energy bills go up, cost of staple foods is going up, the general cost of living crisis as has been deemed by the press. But there isn't a lot of money slushing around to enable us to do that. So looking at and thinking about our finances and our forecasting is really important. But we often think about kind of looking at the future as being a bit crystal bally, and it's not really. And hopefully over the kind of the next 20 minutes or so, I'll explain the best ways of going about looking at this and trying to understand. And we are looking at the future, we are thinking about the future, but we should actually have a rough idea of what's going to happen over the next 12 months. Granted, I think back in 2019, we weren't necessarily maybe thinking there'd be a global pandemic, but that aside, we can certainly think about what's going on. So how do we do this? How do we pull this together? Well, I think the starting point should always be, well, the past. What happened last year? What went on? What did we do? Looking at your historical accounting information, looking at your bank statements from the past 12 months, that information is all readily there, and we can consider what happened. Was there anything unusual that we need to think about that won't happen again? Did we redecorate reception? And if we did that, well, those costs probably won't incur in the next year. And then we can follow that on with, actually, well, what do we already know about the year ahead? So if we already know we're going to have a salaried GP go on maternity leave, or we're going to have a member of staff retire, well, we know what's going to happen. So we can put that into our plans. We can think about that. And we also can look at, well, what might happen. So what could potentially happen? And again, I don't think any of us would have predicted that global pandemic or this global pandemic, but other things that might happen over the next 12 months. We might think about doing reception because actually it's looking a bit tired. A couple of patients have complained, right, well, let's maybe put that to one side, but we might think about doing that at a future point. But what plans do we have? So what are we definitely going to do? So are we going to, such and such is going to retire this year, we're definitely going to replace them, or we're going to do something slightly differently, or we're going to recruit some extra staff into reception to deal with call volumes and initial triage type signposting stuff. So if we've got those plans, we can put them into our forecasting, and it's always review and revise. As soon as you put the pen down on a forecast, it's wrong because you'll know something different. And I had a client that I'm doing some forecasting work for them at the moment, sent them over a inverted commas final version, and about 20 minutes later got an email back saying from the client saying, "Oh, actually I forgot to tell you about." And if you're reviewing and revising, it should be a live document. It's not something that we finish, feel really proud of ourselves and put it in the top drawer to look at next year. We always should be looking at and revising that. So I thought it's also probably sensible to look at and think about and talk about terminology, because us accountants are very, very good at finding different ways of saying the same thing, but there are certain things that we say are actually different. So I thought it would be important to look at the two main kind of things that we'd look to forecast, and the main focus of forecasting, and certainly in GP practices, tends to be cash flow. And cash flow is exactly that. It's money in and out of our bank account, or our petty cash tin, or however we're accounting for our money. And it's when it's received and when we pay it out. So when we bank that check or write that check, or more modernly, when that back transfer comes in, or when we pay that direct debit out, that is the cash flow of money. Budgeting is more when we've earned that income. And a couple of presentations ago, we talked about kind of sets of accounts and accruals type earnings. So when are we going to earn it, and when are we going to incur the costs? And a good kind of difference between the two is things like QOF. So QOF is earned between April and March each year, but the cash flows are monthly cash flows followed by in June, July another payment. But our budget, we just include that 12 months. From a cash flow point of view, we'd also take account of the fact that there's some money coming in at a future point. Budgets also generally include what we would call non-cash items. So things that there isn't going to be an inflow and an outflow of cash, but do affect the accounts. So if we're going to provide a provision for something that might happen, or some depreciation, so the reduction in the value of some assets, that would incorporate within our profit and loss, within our budget. It wouldn't necessarily, well, it wouldn't appear within our cash flow. So I think it's also really important when we're looking and thinking about forecasting, is to actually looking and thinking about, well, what we're going to be doing. So from an income point of view, the global sum is kind of a given, and a lot of the directly enhanced services are kind of givens. But then within that, there's other things that we can choose to do or choose not to do. And certainly historically, everybody did everything, and down that route that we went. There is a cost to that though, and some of that cost is time. Some of it might actually need you to buy in new services or get new skills, or even bring in staff to potentially deliver. So asking ourselves that question, can we deliver everything? Is that possible? And if we can't, then focusing on the things that we can deliver to make sure that we're using the resources that we have in the practice in the most efficient way possible. And then considering, will it all be profitable? So will the income from those services outweigh the expenses? And yep, totally agree that the word profit is certainly continuing to be a dirty word to some extent, but fundamentally the practice has got to make a profit to sustain itself. So yeah, absolutely, we could lose some money on certain services and certain things that we're doing. There's nothing wrong with that. Every business does that from time to time, but overall it's got to be profitable. So by ensuring that we're choosing things wisely and doing things sensibly, and I suppose I should caveat that with, I'm not a clinician, so I can't tell you kind of health delivery wise what is best and what is not, but across the board overall things need to be profitable. So if we're thinking about kind of what incomes that we're going to be bringing into the practice and what income we can generate, The other side of that is cost. And some of those costs, as I mentioned before, if we're looking back at the previous year, a lot of the costs will be somewhat similar. But certainly looking forward and looking at our forecasts, what other costs do we potentially need to consider that might be coming up in the future? And I was told many years ago that in GP practices, as long as the staffing costs are right, the rest of the costs generally look after themselves. And absolutely, we need to be paying attention to those other costs because they can start to run away with themselves. But if you look at kind of your staffing costs, I'm 99% certain that they'll be the biggest number in your accounts, possibly bigger than all the other numbers added together. So getting our staffing right and the costs that come with that is absolutely crucial to the GP practice, to you continuing on as an organisation. So I've just plucked a random number out of the air to kind of have a look at this, because the one thing that a lot of people forget about with staff is the other on costs that sit with this. So if we're going to give someone a salary of £20,000, that's all well and good, but actually there's also employer's national insurance. So based on the current rates, that's another £1,600. And if they choose to be in the pension scheme, there is another charge as well for the employer contribution to the pension scheme. So actually, we've offered somebody £20,000, but it's going to cost us nearly 25. So, £25,000 to 25, that's potentially not a huge number. But if you're recruiting a salaried GP and you're offering them 100 grand, it's going to cost you about 125 to employ them. So thinking about the implications of that and understanding the implications of that, and knowing you need to maybe even have a conversation with your accountants, have a conversation with the partners about other things. It's just making you aware of the other things we might need to necessarily think about when looking at our forecasts. So when we're going to pull together a budget, a forecast, there's a couple of different ways that we can look at pulling those together. The most common way, I think, is probably the best way, is top down. It's certainly, as I kind of say here, it's quick, because you can sit in your office in isolation as a practice manager, as a partner, and quickly decide, right, this is what we're going to do over the next 12 months. This is what I think our income is going to be. This is what our costs are going to be. Done, dusted, in the top drawer it goes. Certainly allows you to control those costs, certainly allows you to understand what's going on, certainly allows you to deliver on the strategy. So if you've had a meeting as a practice, as a partnership, and say, well, okay, this is what we're going to do over the next 12 months, absolutely a top-down budget, you can get your forecast to fit within that quite happily. And yep, as I said, it's set by the top. So the guys and girls round the top table make that decision. But that's also potentially a con. And something that's set by the top is only seen by the people at the top. It's not going to account for what individuals within the organisation might necessarily need to have money spent on or have desire for. And it certainly doesn't have any buy-in for the team if the team's even involved. So therefore, top down, decide what it all is. Great, goes in the top drawer. Great, there's no involvement from anybody. Quick, doesn't necessarily get that buy-in, and that buy-in can certainly, when money is tight and resource is thin on the ground, can be quite valuable and can add a huge amount to the practice. So kind of the reverse of that is bottom up. So you get all of your individual teams, potentially even the individual staff members, to come up with what they sort of see the costs being over the course of the 12 months. And that doesn't necessarily mean that they're going to decide their own salary and off we go. But if you've got a reception team that actually foresee that the phone system doesn't work particularly well, or there's issues with some of the seating in reception that you might not be aware of, it enables them to have buy-in to that process. Say, well, actually, reception could do with £500 spending on it to fix the broken chair or the damaged this or that needs something doing to it. So they've got some buy-in that, they feel a bit of ownership, they feel they've made some difference, some change in the organisation, that they get that warm feeling inside that they're part of a team. It also allows you to gather knowledge. So if you're not aware that there's some seats broken in reception, or the reception just moved them out of the way because you're on holiday, or you know, you just weren't in that day, you actually then get to understand these things, that these things need dealing with. The cons are definitely that loss of control. So if you were to just turn around to everyone and say, right, what should we spend some money on? The list will be endless. Generally will involve recruiting more staff members, because I'm sure every team in your practice could do with some more staff, or there's a perception at least that could do with some more staff. So there is that potential loss of control, and of course, you know, that could also lead to, well, when you turn around and say, well, there's no money for more staff, you know, the rather sarcastic response, well, why did you ask? But you know, I do think this buy-in element of it works quite well. The other kind of failure with the bottom up is that well, there's no top level involvement, or they're involved right at the very end. So if there's a strategy that we took from the previous slide, that this is the strategy of the year, but actually no one else in the organisation, the practice, knows what that strategy is, well, they're not necessarily going to bring that into any kind of budget. A zero-based budget is kind of the final different type of forecast that we can have a look at, and what it effectively means is it's starting from scratch. So getting I don't actually have a blank piece of paper, but a blank piece of paper to hand and start again. Now, the big con with that is certainly in an established, you know, running practice, that could be very costly and very complex to do that. There is already a lot of moving parts, and starting from scratch potentially isn't an option. But if you're going to go and do something new or different, so if you're going to go and engage with a local business about delivering some health checks, or you're going to go and do some flu jabs with them or something like that, then actually, yeah, start from a blank piece of paper. What's this going to cost us? What staff are we going to have to bring in? What costs of potential equipment do we have? Time lost, etc. You know, starting from that blank piece of paper is absolutely the right thing to do. That will then get you to, well, actually, what do we want to charge somebody for that kind of a service? But it does, in an established type of practice, makes you really think about why we're spending that money. How are we spending the money in the right way? Are we doing the things that we were thinking that we're going to be doing? It could also potentially identify some redundancies. And it could potentially identify, well, actually, we've got more resource than we need. You know, it focuses the use on the resources that we need. So if we know we're going to deliver X, or we've got so many patients that are going to require flu jabs in the winter season, well, actually, what resource do we need to put in place to deliver just that? So it enables you to justify why we're spending the money and how we're using our resources. It also allows you to consider both new and old, and compare the two to see whether or not there is any differences there. So, you know, the old childhood IMS against the 6-in-1. Obviously, you don't have a choice, but what's the difference? What's the difference between the two? Are we winning or losing as a practice? But it also allows you to eliminate waste. So I said before, if you've got kind of underutilized resource, or resource that you just don't need, or you're looking at things, it's a good opportunity. You know, and I've seen this kind of exercise work well for new practice managers. So if you're a new practice manager who's come into a practice for the first time, actually sitting down, and my kind of top tip for a new practice manager is go through the direct debits, go through the standing orders, look at the bank statement, see what's actually going out, because you can quite quickly realise, well, we're paying for something twice here. We've got, you know, 6 subscriptions to the BMA. You know, why do we have 6 subscriptions to that? You know, you can really focus on why, where money's going, how costs are coming through. One of the big cons is it can become very political. So if you're kind of involving this process, and people feel that you have it in for them, they can definitely feel that this is an excuse to eliminate waste, and I don't think that should be the reasons why you go down this route, but that can be a perception. If you're then going to ask me, well, come on, Phil, that's great, but which one? It's probably a bit of everything. You know, I think I said that top down is the most common because that's the easiest. We can all sit in our offices, in our practices, and go, right, great, I can drop a budget. I've been asked to do that. I've been asked to do a forecast. I'll do that this afternoon before I go home. it's definitely the most common, but I don't think it gets the best out of the organisation. It certainly doesn't give you the most accurate picture. So, you know, picking the best out of the top down, bottom up, zero base, I think is the best combination to make sure that you've got a good understanding of what's going on in the price, and enabling you to kind of forecast for the future as to what's going to come up over the next 12, 18, 24 months, however long you're looking to forecast for. So the last bit kind of takes us back almost to one of the first slides there about monitoring and how are we monitoring what we're doing. And as I said at the very outset, it's really important to monitor, because if we're going to set ourselves a forecast, well, we've spent some time on that, so we should understand why we've done that. And actually, well, what are we doing to achieve that? So if we've set a forecast, this is what we're going to have cash flow wise over the next few months. Well, are we on track with that? Are we keeping in line with where we're going to go? Has anything slipped? And it's very, like I said before, it's very easy to do that forecast. In the top drawer it goes, I've done that task, move on to the next one. But actually, why did you do that task in the first place? And practices generally that come up, you know, with kind of cash flow challenges or issues around that, generally tends to be because it's not being monitored. And investing some time in monitoring that cash flow, monitoring budgets over the course works really well, and it doesn't need to be any more complicated than you know, that Excel spreadsheet. And I've said it in a couple of presentations, including this one, about my favourite acronym, which is KISS, which is Keep It Simple Stupid. You know, a list of what we're expecting to come in cash flow wise, what we're expecting to go out cash flow wise, and a balance at the bottom. Excel is brilliant for keeping that kind of information together, and actually then, you know, we begin at the beginning of the year, right? We think this is what we're going to get in global sum, this is what we're going to get in enhanced services, we're going to other income, this is what we think we're going to pay in salaries, in other costs, in drawings, in superan, etc. And then actually month by month monitor that. So this is what we said we're going to do, this is what actually happened, and there's a difference. And the key is to think about those differences. And I talk to clients all the time about, well, you know, if you've got a difference, why? And you can never get a forecast right, because at the very first slide, yeah, it is a bit crystal ball. We're gonna have to assume what's going to happen over the next 12 months, but it should be fairly accurate based on the things that we've talked about so far. So if we said we're going to spend £20,000 a month on salary costs and we've only spent 18, why? Now, is it a case of that somebody's retired and we don't think we need to replace them, so actually we've saved £2,000 a month, or is it actually we've had somebody on the long-term sick, we're struggling to cover their work? Yes, we're saving money in the salary costs, but actually that is having an impact on our quaff monies because that person dealt with some of the submissions. So understanding what's happening within our numbers and looking at why it hasn't panned out the way that we thought it was going to can be quite important, and it can also be a good reminder of what's coming up in the future. So earlier on we talked about that it might be a good idea to replace some equipment in the reception area. Well, actually we said we're going to do that around October time. It's now November and we've not done it. Why have we not done it yet? We can't forget that we agreed that we're going to do that. Right, let's go and spend that money. And it kind of finally also just ensures that things are on track and that they're going the direction we wanted them to. We're not going to come to a point where we're going to struggle to pay salaries at the end of the month, or we're going to struggle to pay drawings to partners at the appropriate moment. And it's just, you know, it's always sensible to kind of monitor things. And a couple of the questions that kind of people sent in beforehand about kind of different softwares, and you know, there's QuickBooks, there's Xero, there's Iris, there's Free Agent, there's Sage. There's 101 different softwares out there, but they can be quite good as well at helping monitoring kind of what has actually happened against what did we say that was going to happen at the start. And then, you know, there is some really good kind of YouTube videos around that and forums and support about how that software works. And if you're unsure how your software works, all of the software providers do training courses, whether they be paid or kind of part of the subscription that you're paying. we're kind of using that software to its maximum to ensure that we're getting good information in the practice. And again, it's ensuring that you're using that information and it's not just sat in the top drawer and yep, every month I look and see that that's it, yep, great, put that in the top drawer. Because actually, if things are going wrong, doing things quicker is really important, and kind of highlighting that to partners, highlighting that to the external accountant, highlighting it to the bank can be really important to do. But as I said, you know, Excel is a really good tool for kind of keeping this stuff in a sensible way without overly complicating it and making it more difficult than it needs to be. And you know, we've spent a lot of time with some of our clients over the years setting up systems and processes to enable that monitoring to happen, so that they've got the tools in house to say, right, well, great, I've now got the right, you know, a spreadsheet that I understand that fits for my understanding of how Microsoft works to keep an eye on what's going. And the one thing that the kind of the final thing on monitoring that I tell every partner I ever meet is just have a look at the bank account. You know, my bank for our business, they text me on a Monday morning. Oh, sorry, not on a Monday morning, but every morning with a bank balance. You know, what is the bank balance today? And actually, that's a really important, powerful tool for me to know if things happening the way that I think they're happening. And if it's not the balance I was expecting it to be, I can then log on and have a look to see why. Yeah, and in that way, things shouldn't be a surprise. And ultimately, you know, the partners of the practice are the responsible ones, so they need to have a handle on that. So I'm going to turn it over to some questions now. If anyone has any questions, I'll look at the chat in a moment. I think you kind of a couple of questions that you very kindly sent in before. I think the two kind of ones that kind of stand out that I haven't necessarily covered off in the presentation is pay rises, and yeah, absolutely, there is a, you know, that kind of cost of living challenge at the moment, and that need for need, I think it's probably the right word, for staff to be remunerated in a way that enables them to continue to feed themselves and pay bills, is going to be a challenge for practices, and I think businesses as a whole over the next few months. And I think, as we've seen, that kind of income is not going up at the same rate that our potential costs will be. You know, practices need to look at what savings they can potentially do, so that not just partners can see an increase in their earnings, because they've got the same pressures that employees do, but employees have as well. And I think, you know, forecasting can be quite a good tool to show where we can potentially save costs. You know, that zero-based type of approach, and why we're spending money on this, what value does this add, and I think that's always the crucial thing, is that value add, to make sure that we're getting good value from the things that we're spending our money on. And I think the other question that, as I said, kind of stood out was you know, the time taken in having to kind of keep up on top of new and differing sources of income, and I think, again, you know, keeping a track in Excel is the best way possible. I think that the first presentation we did, we had a slide on that you know, kind of what is the income, the date we've done the submission, has it been received, doesn't need to be a lot more complicated than that. And that should help keep a track of kind of what's due in. And again, I had a practice the other week that didn't realise they were due just over £40,000 in flu monies. So again, you know, knowing that that's coming up and having that kind of little Excel document, and in fairness to the practice manager, they were new in role, so they definitely weren't aware that money was due in. And after a complaints email to PCSE, it should hopefully arrive next week. But it's a fair chunk of money, £45,000. It's certainly more than the partners' drawings are this month. So, you know, keeping on top of that stuff and making sure that that's in place is important. So I'm just going to kind of find if anyone has, has anyone put any questions in the chat. Excuse me. Yeah. So Glenn's mentioned about kind of I suppose maybe I wasn't particularly clear in the slide there. So he's asking about the 2.1% pay increase and the difference between that and the 3%. So when the BMA, NHS England, and the Doctors and Dentists Review Board come up with a new global sum figure each year, this was part of a 5-year deal a few years ago now, but they factor in what they think pay rises are going to be. So the assumption for this year was that pay rises would be 2.1%. So in getting to the 3% that they've then awarded, they have worked on the basis that there'd be a 2.1% rise given to staff. Now that's not committed. You don't have to give 2.1%. You don't. There's no requirement to do that. That's just what they've included in their figures to calculate the increase in global sum value. And then, yeah, Victoria's asked a question across a similar vein there with regards to if NHS as a whole gives 3%, it's difficult practices to give just 2.1. I sympathise with practices greatly about the challenges that they're going to go and have over the next few months. If we look at kind of national minimum wage, so if you're sat on national minimum wage, there was about a 6% rise that you received on the 1st of April. It's difficult if you're just above minimum wage for your colleague to have had a 6% pay rise and you just get 2.1, 3%, whatever's been awarded by the practice. I think again it comes down to kind of consultation, discussion, open conversations with individuals and practice staff about the reality of the situation. It's not a situation where partners are seeing a 20% uplift in profits and staff are not. That's not what we're going to be seeing over the next 12 months. I think, as I said, that kind of 3% is to cover everybody in the practice. So having those conversations, making sure that we're being as efficient as possible, turning lights off, those kinds of things that bring financial benefit to the practice, and a lot of staff in practices don't quite appreciate they're an employee of the practice. They see themselves as an employee of the NHS. So it's important they understand that each practice is its own little small business in its own rights, and it has to deal with the costs of increases in gas and electric and things like that. So I do think having those conversations is important. And I've mentioned a couple of times during the presentation about previous presentations. Savinda has shared, and after this presentation there'll be a link being sent out with regards to the other webinars that we've done, and that probably. If I just go back to the presentation, it's still there. We are going to be doing some more. So if I haven't completely bored you to tears this afternoon, we are going to do some more presentations over the coming months. So we've got some kind of pencil in with regards to financial disputes and partnership issues and conflicts. Practice mergers is still certainly a very popular topic. PCN Finances, we're seeing kind of time and time again that the PCNs are still kind of grappling with getting on top of things themselves. We've got a session on that, be sensible. Personal expenses, we've talked about costings and budgets here, but certainly personal expenses would be something we're looking at doing, and then any legal type issues as well. But I think the important bit is anything else. So I've got my contact details are on there. So if there is something else that you think, oh, I'd really like to have a presentation done on that, either contact Thornfields directly, contact myself, and I have a conversation with them about us putting on a specific topic over the coming months. But no, I don't think there's any more questions that I've missed. So it either means I've bored everyone to tears or confused you all completely. So hopefully, though, it means I've answered any questions that you may have, and I look forward to joining you on the next session. So thank you all very much. I hope you enjoyed your teas and coffees, and I wish you all a good afternoon. And as I said, if you've got my contact details, if there's anything on there that you want to get in touch with me by, feel free to do so. Enjoy the rest of your day.